we're going to go ahead and get started. And we are waiting for Amelia. She's going to be joining us. She is one of the partners who is going to be going over this new program for the Zero Down. And for those of you who have joined, I do want to thank you for joining today and getting this really insightful information. I feel like it's really going to be helpful for those who are going to be potential homeowners or have owned a home before, of course, and also for my realtor partners. This is going to be an exciting program for you to get acquainted with because I feel like a lot of realtors can pass this information on to their clients. So we're going to go ahead. I want to first introduce myself for those who do not know me. My name is LaShantel Williams, and I am the founder of Creative Realty Co. And this is a full service real estate company. We offer creative solutions for home buyers and sellers. And we partner with real estate agents, loan officers, and so forth to offer really great resources that can help homeowners and or potential homeowners and sellers um, get access to resources and information that can help the home buying process or home selling process go a little bit smoother. So this particular webinar today is about the Zero Down program that's through FHA. This program is very unique. It's not unlike any other traditional down payment assistance program. And what I mean is this, is that most traditional programs require you to have a credit score between 620, 640. It also requires you to be a first-time home buyer. Like many of the down payment assistance programs, you will not be able to buy a home if you've owned a home before. So this program does allow you to have owned a home before and still qualify for it. So I do have Amelia, who's going to be joining us here in a second, who's going to go over this program in detail so that you could have the information that is needed to share with other clients or to share with other people, but also for you to be familiar with it when you are ready to become that home buyer and get into this program. We have Amelia here now, finally. She is going to be going over the down payment assistance program. John says, yay. I know. Thank you for your patience, John. So she's going to be going over this program in detail. So I'm glad you guys who are here still waited because she's the expert in this program and she's going to go over it and talk about it and the differences between this program and similar down payment assistance programs. So Amelia, take it away.
Okay, so yes, thanks for having me, and I'm happy to share the down payment program. It's a down payment program that is not a grant, so I want to start with that. A lot of down payment programs are grants from the county that come with a lot of hurdles and loopholes and criteria that you have to meet. What's unique about our down payment assistance product is that you don't have the hurdles of some of the other grant programs out there. So first of all, you don't have to be a first-time home buyer. You could, you can have a residence, 100 miles away, or maybe, sold a house a year ago renting, and now you're ready to get back into the market. You can take advantage of this product. You don't have to have pristine credit. The credit score minimum we require is 600. We don't say you can't make more than X. A lot of down payment products will state you can't make more than, $6,000 a month as an example. In this product, if you make, $20,000 a month, that's fine. We're okay with that. We don't have that income limitation. We also don't have the limitation on this product that says you have to have a debt to income ratio max of 45 and below. So you might have somebody who's got a debt ratio a little bit over 45, maybe let's say they're at a 51% back end. And that might be because they just started getting paid commissions and we can't count it, that type of thing. As long as our automated underwriting system, also known as DU, which is processed on every loan in America, as long as we get an approved eligible, we're going to take that loan. So we're very liberal in the underwriting guidelines there. So the amount of the down payment product is going to be 3.5% of the purchase price. It is an FHA product. Okay, so a lot of people are probably familiar with the FHA loan product, knowing that it is liberal with its income allowances. Um, so the down payment of 3.5% is going to be due and payable. It is not a grant that is forgivable. It is going to be a second lien up to 100% of the value. The 3.5% of the purchase price, that's going to be your second mortgage loan amount. That can be used towards down payment, closing costs, or a combination of the two. So as an example, let's just say you have a client that only has 2% saved and they're panicking. I need to buy now because home prices are still going up. And of course, that's what we're experiencing in a lot of areas. That's where this product comes in, right? They can use their saved money to help with closing costs and use that 3.5% down, the second lien that we're getting approved for. They can use that towards their down payment. The second mortgage, I will say again, is going to be due and payable. That is amortized over 10 years as a second mortgage. So that's a very important side note. Keep that in mind. Sorry, I got a call coming in. So what's nice about it being an FHA as well is FHA will allow up to 6% seller concessions. So if you find the right buyer or borrower, they could technically kind of get in with very little to nothing out of their pocket if they take advantage of the 3.5% DPA, down payment assistance, and they qualify. Again, they don't have to have the pristine credit, and you can get a seller credit of up to 6% to help cover the costs, the closing costs, which include prepaids. A prepaid is homeowners insurance and property taxes that are part of your mortgage or real estate transaction that have to be prepaid. So not really a cost, it's just part of being a homeowner. So they're considered a closing cost, which can rack up, right? Buyers don't really know to prepare and save for that. So by asking for a seller credit, that's an option. You can get up to that 6% to cover that, the appraisal fee, to cover the title and escrow. So that's just a little creativity that I just want to point out. This product is good for condos. It does have to be an FHA approved condo. It is approved for a 2-unit property, maximum 2-unit. We just got the mobile home or manufactured home approved. It does have to be bolted to a permanent foundation, and the property, meaning the dirt beneath the structure, has to be owned as real property. Townhouses and single family residences. So that is it in a nutshell. And I will open it up to questions if you have any. If anyone has any.
Yeah, one thing you mentioned, Amelia, is that this program any person that's not a first-time home buyer can qualify for this program. So can you go into more details on that? Like, can they currently own the home, or do they have to have previously owned the home, sold it, and no longer own it, and they're looking to purchase another home? So how does that work?
Yeah, that's a great question. So I brought that up because a lot of those down payment products say you have to be a first-time home buyer. This one you don't. So yes, they can own a home right now currently and take advantage of this product. Now, I want to point out, this is super important. If they plan on holding on to the home that they're vacating, okay, and they want to rent it out, the property they're buying per the FHA guidelines has to be at least 100 miles away. So it's very important. If they're planning on selling the house that they're departing, it's a non-issue. So yeah. So okay, you could be a first-time home buyer, but you don't have to be a first-time home buyer.
Right. And then also, I know that there's like a max amount that you can purchase with FHA. So yes. I know that those are usually standard across the board. Is that the same thing with this program?
Yes, you're going to follow the same FHA loan limits, and that is dependent and varies by county. So do you have high balance in the Alaska area? Or do you guys just have the standard loan limit typically?
Standard loan limit.
Okay. So you should, in California, which is where I'm from, We have the standard loan limit and we have high balance. And this product will only go up to the standard loan limit. It will not go up to high balance. So that's something I have to point out. But if you guys don't have high balance, it's a non-issue. So it
Okay.
just goes
So
up
it's
to the
by the
county
state.
limit. Yeah,
Yeah. Okay. By the county. Okay.
yeah. And another thing too is if you have, a buyer or if you have a client that's here listening and they're like, I'm not sure if I can qualify. I'm kind of afraid to, um, get into contract or make an offer. La Chantel can, send the loan to us with all of your documentation and we can underwrite it without you finding in a property. So you know you're approved with peace and confidence. So that's something we also offer.
Awesome. I think
Yeah.
that's definitely helpful for those that are wanting to purchase but haven't yet found the home yet. So does anyone have any questions for Amelia while she's here? She'll be more than happy to, answer any question that you guys have about the program. She went over pretty much everything. Minimum credit score is 600, which is great because, like I mentioned before, many of the down payment assistance programs require you to have a much, not too much of a high credit score, but 620, 640 plus credit score, which,
Mhm.
a lot of people aren't there, this with this economy and with everything. So I think this program is really, really, really great to really, really pave the way of home ownership, literally. So if you have questions, you can feel free to put it in the chat and Amelia can get those questions answered for you if you can think of anything. Okay. So John says, what if ONR of the spouse has bad credit? I'm sorry,
It's
I may be reading this wrong.
it's okay. Say it again.
Okay,
What,
one. Yes. What if one of the spouses have bad credit? So they're joint on the application, but one has bad credit, one has decent credit or good credit. That's what he's asking. So
yeah, okay, yeah, that's actually a great question. So we still have that minimum credit score requirement for the spouse then. They would have to have a 600 score if we needed to have the spouse on the loan for qualifying purposes. Let's say the spouse is working, we need to use that income to get them to qualify. We definitely need that spouse to have their middle score as 600 or above, okay? If this is very important, if you have a spouse whose credit is so bad they can't be on the loan and you don't need the income, we do have to count the spouse's debt per FHA. So keep that in mind. And that's something that we work through as a lender. You don't have to worry about it too much, but I'm just going to throw it out there to kind of plant that seed to know.
yeah, and that's good information to know. Like even as a borrower, that's information that is not necessarily something that most borrowers, tend to think about.
Yes.
As a lender, though, that's things we think about, but it does open that door for them to think about things that they should consider when applying for this program. And
Yeah.
John is asking, so 600 is the minimum?
Minimum. Yeah.
Score.
So if they have a 599 score, won't work. Now they can have a 750 score. That's even greater. That's
Right.
amazing. But we like to point out the minimums. Yeah.
Yeah. And then Angela says, can you share an idea of what a standard loan limit might be for, let's say, California, maybe like Bernardino County?
Okay. Our standard loan limit in California just went up to 766,500. So that means, we could lend on that loan amount and it not be considered a high balance loan. And then the high balance loan, I'm reading this because I don't have it quite memorized for the year. 1,149,825 is the high balance limit.
What about, let's just do Dallas. I see John is asking if you work with Texas real estate. That was one of his questions, but I'm sure we're licensed in Texas to do loans there for this
Yeah.
program.
Yeah, actually, I'm glad you brought that up. We can do this product in Texas. It's not available in New York, Washington, West Virginia, or Massachusetts. But so let's do. Did you say Dallas, Texas?
Yes. Dallas County.
Okay, I am showing 563,500. Does that sound about right
Mm.
for your
Hmm.
county limit? I can't
Yeah.
see the chat, so
And then Prince George County, that's in Maryland, is what Angela's asking. Prince George County.
Prince George.
Hmm.
Okay, let me look. Maryland, there you are. Prince George. Wow. Prince George. It's just so like formal.
Yeah.
Okay, Prince George. Eh, this is kind of crazy, but it's showing 1,149,825. I don't know Maryland well, and
Well,
I would want to double check that just because I'm out in California, but that's what the FHA website is showing. I think that's very liberal.
very.
Let me run a scenario and we'll find out right now. Hold on a minute.
Okay.
Yeah, let's just do this.
Wow. That's
Um,
the highest I've ever heard for limits.
I know, right? So let's just say we'll just use $1 million to make it easy,
Even.
nice round numbers.
So John has a question while you do that, Amelia. John's
Mhm.
question is what's another requirement outside of the 600 credit score that the applicant would need besides the 600 credit score?
Yeah, I mean they can't have a recent bankruptcy. You got to be 2 years out of a bankruptcy, which is standard. You know, they can't have, here's the thing, they can't have like a bunch of recent collections because it'll never pass that automated underwriting system that I talked about at the beginning. Um, it just follows the standard credit criteria for FHA. So the biggest thing is, the bankruptcies, the foreclosures if they had one, if they were, if they experienced one. Um, what else? If they have a late or a slow pay on a Macy's that was 30 days and it was an isolated incident, it's not going to be an issue. So hopefully that answers your question. So again, if you want to get pre-qualified or you want to get your buyer pre-qualified, that's definitely something we could do. Just get the application into La Chantelle, and we'll handle that. We'll get you an answer quickly. So
Yeah. And so pretty much like standard, I know FHA is really big on collections and debt and stuff on your credit. So I'm sure that
mhm.
that's something also that's a requirement that would have
Yeah,
to be dealt with
yes.
prior to moving forward with a loan. And so what are some of the income documents that are going to be needed? Like I know standard tax returns, W-2s, bank statements. What are some additional documentation? I know that there's standard documentation that's needed,
Mhm.
but
Mhm.
what are some other documentation that's going to be needed for the borrower?
Yeah, that's a good question. So you're always going to need or plan on getting 2 years of W-2s and 30 days worth of pay stubs if they're a wage earner. They absolutely have to have a 2-year working history per FHA guidelines. So if they only have like been in the workforce a year and a half, they need the 2 years. Um, so the 2 years W-2s, I don't need tax returns unless they're self-employed or a 1099, which is considered self-employed. That's when they file a Schedule C, right? And they take write-offs. Then we will need 2 years tax returns if that was the case. And then you're always going to need 60 days worth of bank statements to prove any funds that are required to close. So let's say they don't get any seller credits, and all they have to come in with is the closing costs because they're taking advantage of this 3.5% down payment assistance. We have to source those funds. We got to make sure that they have the monies to pay for this out of their bank account. An exception to that would be if they get a gift. Let's just say that the parents give them a gift, then we're going to want the parents' bank statements, which is an FHA requirement. So that's kind of a heads up. And I just ran it. It's not liking it that high loan amount. That's
Okay.
yeah. I'm glad we checked. Yeah, it's not liking that loan amount. Let me go back to. Let me try the. I have a feeling with Maryland, it's going to be the same as California, 766 500. Let's try that. Let's just do
And so,
750. Mm-hmm.
so while you do that,
Yeah, no, go. I like it.
does this product also work with construction, new construction? That was going to
Yeah, yeah, like a
start.
builder, you mean? Like,
Yes. Mhm.
yeah, absolutely, absolutely.
And I'm assuming it's not a one-time close type of structure, deal structure, one-time
Um,
close.
you mean for the new construction? It would
Yeah.
have to be one-time close.
Okay.
Yeah, it would have to be. Yeah. Okay, let's get down to this Prince George County. See if I'm right on my what I am suspecting. Yep. Okay, everything else is the same. Let's see what happens. Yeah. So drum roll. Final answer is 766 500 for Prince George County in Maryland.
Okay.
Yeah.
Well, there you go, Angela. You got your answer.
You got it the long way.
Yes. Okay, so let me see if there's any other questions here. Of course, John wants to know how to connect. If anyone wants to apply for this program, you would have to go through me
Yes.
because Amelia's the investor. So if you have clients, if you're a realtor here and you have clients that want to apply for this program, then I'll be happy to assist you with an application, and then I'll be working with Amelia to get you guys approved, get your clients approved for it. And of course, if you're a client or you want to be a client, you'll be working with me while I work with Amelia to get you guys approved for the loan. All right. Any other questions? Yes, John. Yes, you'll be sending them to me. And then I'll work the loan up and work with Amelia on it, and we'll get it through, get you approval.
Yeah.
All right. So any other questions while we have Amelia here? I think she pretty much covered everything.
Yeah, and if you think of a question afterwards, feel free to reach out to La Chantel and she could check with me.
Yeah.
Yeah.
Yeah. Doesn't look like we have any other chats coming in with questions. And I believe you answered all my questions. You're welcome. We're more than happy to help. They said, Angela said, thank you. So yeah, so if you have any additional questions that wasn't covered today, or you feel that wasn't covered today, feel free to reach out to me. And if, of course, I can get the information from Amelia, and we can go from there. If you feel like you have any questions right now, you're still open to ask those questions. But yeah, we are more than happy to help you guys with this program. If you're a realtor or if you are a potential home buyer who's looking to purchase a home or relocate. Now, actually, what about refinancing? Does this program apply for like those who want to refinance if they, I don't see why anyone would need that because sometimes there's equity involved in it. But let's just say someone didn't have equity and they needed that extra help. How would that work? Would they be able to qualify
Yeah, no, it's only for purchases.
for
Yeah,
purchases?
purchase
Okay,
only. Yeah.
yes, awesome. All right. So if you don't have any other questions, without further ado, thank you guys so much for joining. Thank you for your patience, most importantly. Glad you guys were able to, remain on and get this really good information that can really help you. And for those that that may want to, qualify for this program, or maybe they want to buy a home and they're short on funds, this is a great program for them to look into. Okay. So
Yes.
Amelia, do you have anything else you would like to add?
Just thank you for your time and for letting me present.
Thank you. We appreciate it. So thank you guys so much. We enjoyed our time here. And like I said, if you have any questions, feel free to reach out. If you have my information directly, feel free to reach out to me. If not, I did send my email in the chat for you to reach out. Alrighty. Well, thank you guys so much. You have a wonderful day and thanks for joining. Thank you, Amelia.
Thank you, LaChantel. Thanks, everyone.
Bye.
All right. Bye bye.